Morning everyone, welcome to Ainsley News. Everyone's ready for another week. Today we're talking asset performance and stagflation on everyone's minds. Each year, one of the most eagerly anticipated annuals is the In Trust report from Switzerland's Incrementum. As it has been the case for a few years now, they are pre-releasing a teaser chart pack of what's to come without any written explanation. This week, with news permitting, we will pick a few to discuss them preemptively. And as we noted last week, the setup now with persistent inflation and slowing growth is that dreaded financial bogey-man, stagflation. So how did we get to this point? Pretty simple, really. The US money supply, measured as M2, has only grown faster at 2 points in over 120 years. The 40s, in response to World War II, and the 70s, with the resulting inflation and economic turmoil that ensued, and a record surge in gold and silver. As discussed many times, that did not translate to real inflation at the consumer level, nor real robust economic growth. The latter, in part, was because of the enormous debt burden that came with it. What did inflate, of course, was shares. To regular readers, none of this is new news. Stagflation appears to be our immediate future. So how do various assets fare in such an environment? I've got a table here today that shows only oil outperforms gold and silver. While we've seen oil surge so far, gold and silver are yet to break out. Of course, a stagflationary environment is a thief of purchasing power. Put simply, you can't expect to print that much new currency for effectively the same amount of goods, and arguably amid moribund economic output, relatively less again, and not expect to see that. Got a chart here that's a salient reminder that since we left the gold standard in 1971, depending where you are, the major currencies of the US dollar, euro and British pound have lost between 95 to 100% of their value, measured against real money, i.e. gold. We should never forget the difference between fiat currency and real money. This chart here just showing that downwards trend of all those currencies since 1971. To date, and particularly since the GFC, if you were clever or brave enough not to fight the Fed and invested in growth shares in the US, you would not be too concerned about that loss of value over paper money in your wallet. However, at this specific juncture, looking at the Buffett indicator and the historical performance of precious metals in a stagflationary environment, one has to clearly question the longevity of such a position. Interesting time to be in shares. But only time will tell. If you're interested in some bullion today, jump over to ainslebullion.com.au. You can buy, sell and exchange there. At our Brisbane and Melbourne offices, you can jump on in and buy over the counter. If you're after some crypto, I've just had a notice of BTC's movement over the weekend, and that's popped up again. It's around 44K for US dollars. And a lot of other altcoins are jumping up as well. So jump over to ainsleywealth.com.au if you're interested in some crypto. And if you'd like a glimpse at our own cryptocurrency that we've built and backed by real gold and silver, check out goldsilverstandard.com. That's right, we built a little cryptocurrency there that takes you back to being able to use the gold standard. Enjoy your Monday, everyone. Keep an eye on everything, and we'll catch you tomorrow for more news.